everybody. I'm Joe Gallimore, Director of Investment Management with Argent Bridge Advisors. Welcome to this edition of Cup of Joe. March saw stock markets rise again with the S&P 500, the NASDAQ, and the Dow Jones Industrial Average Indexes all closing Q1 at or near their all-time highs. This was great, nice to see, but we want to point out there's a lot going on underneath the surface right now. And that's what I want to talk about today. For a while now, a lot of economists and strategists have been predicting a slowdown in the US economy. But instead, it's almost been kind of the opposite of that. Many of the data points coming out continue to show that the US economy is strong and resilient and continues to maintain that strength. But at the same time, you have members of the Fed saying that they will not cut interest rates before they are convinced of the inflation data. And that has not yet fully happened. So there's this tug of war happening, causing persistent volatility in the markets week to week. Now, this past week, to start April, beginning Q2, we saw this happen on a daily basis. The S&P 500 index had back-to-back days of 1% moves in the market, and they happened in the opposite directions. So nowadays, it seems like the stock market is reacting to every little thing, every little data point that gets published. Market has a bigger reaction. Now, when this starts to happen, we advise that the best thing to do is just buckle your seatbelt and be patient. It's kind of like what they say when you're flying. While you're in your seat, just leave your seatbelt on in case of unexpected turbulence. So now in today's stock market, that turbulence can come from pretty much anywhere. Comments from the Fed, changes in interest rates can cause it, a miss on corporate earnings, even geopolitics. Those can all cause these little ripples in the stock market. But as we're seeing this year, even through pockets of volatility, the market will continue to rise on positive news. And the labor market, the US consumer, basically the economy at large, that has all remained unexpectedly strong. So always keep in mind that this stuff is impossible to predict. The market is sensitive right now, and we think that simply knowing that it's sensitive, that can help you stick to your investment plan by not overreacting when the market overreacts. You know, investing is hard, and it's hard due in equal parts to one, not knowing what's going to happen, obviously, but two, having to live with that uncertainty. By live, I mean handle it emotionally. Too many bad investment moves are made when an investor can't calmly handle an emotional response to some short-term volatility and instead remain patient. By the way, in some sense, all volatility is short-term, right? So to close, as the macro landscape continues to change with interest rates, geopolitics, earnings, are we heading into economic slowdown, or is that passing us by? If this market remains choppy, which we think it will, remain patient and remain confident. These environments typically present very good opportunities for active stock strategies, and they provide us good opportunities for rebalancing, which is something our investment committee is discussing at the moment. So if you have any questions about anything, please reach out to myself or anyone else at Argent Bridge, and allow us to help. Thank you all very much.